Large in Business Digital Entrepreneur podcast. Today we got a special guest. It's Chris Murphy. He's the founder of Klink Finance. We will talk about exactly what Klink Finance do in the podcast, but I can tell one thing: they just raised $500,000 for their project, and it's very, very interesting because it involves crypto, obviously finance, and a lot more. So welcome, Chris, and yeah, let's go right into it. Tell us a little bit about yourself. I mean, how did you got there? You're located now in Berlin. You're originally from the UK. There is a lot going on, obviously, in your life. So please give us a little background on this great parkour.
Sure. Thank you, Omar. So yeah, as you've mentioned, we're a pre-launch crypto wallet is probably the simplest way to put it. We are very mission driven to bring prize-linked savings into the consumer fintech market that's powered by blockchain. So I can touch on that probably later in the podcast, but a bit of background about me. I'm Irish. So for my sins, born and bred in Dublin. I left Ireland when I was 23, 24 years old. But kicking off my career, I had done quite a stint in LinkedIn and Twitter, working with a lot of personal financial applications, gaming businesses with their direct-to-consumer campaigns. I did a stint in New York. I helped an Irish business move into the US, North American markets. Was in London for a while within financial services. But as you rightly said, I eventually found a home in Berlin, where I was heavily involved, still am, very heavily involved in the venture development, venture capital ecosystem. So consistently validating different business models, understanding, researching different businesses in different markets, and understanding how we can optimize, improve, and change them to bring other solutions and services into the market in different spaces. So I met my co-founder, Philip, very late last year. We're coming up to a year now. Seems a lot longer with the journey we've been on so far, but kicking off, we built Klink from the very start of 2022, ultimately on a top level of validation of bringing gamification into personal finance. So that was the overarching theme that we looked at initially. So what led us to this theme was very much, looking at separate verticals. So if you're familiar with language learning applications, Duolingo and Babbel, if you look at fitness applications, obviously gamifying people's steps against their friends, insisting better kind of learning behaviors, better fitness behaviors. But we never really saw it that well applied to the personal finance space, which we've thought was quite interesting. So a really top level view on the market to see that there's a huge gap of opportunity here for people to improve holding, managing funds, improving their wealth. And yeah, so we dug a bit deeper. We had seen that in the personal finance space, gamification, it had either been around in the dinosaur eras of the 1956, when there's a number of different saving schemes that have been incorporated by the UK. I'll touch on that probably a bit later. But also some emerging players within the Web2 space. So we had seen some consumer fintech applications in the APAC regions, Asia, and the US markets starting to emerge. But we saw holes in their game. So ultimately, within a personal financial application that incentivizes rewards, we have a personal thesis that it has to be monetarily driven, of course, right? To be rewarded for personal finance application, you'd want to be getting some form of return in terms of a consumer psychology of that topic, of course. But these Web2 players, what they were doing, it seems completely irreversible to the state of the markets we're in now with the macro, but they were raising huge amounts of investor capital over 2020, 2021. Exactly. And what they were doing was
same as the Amazon space as well.
Yeah. So there was just cheap capital in the markets, right? But what these peers in the market, they did things very well, right? So approved the user acquisition model. They were blowing up in terms of user bases, but it wasn't really a scalable business model, because what they were doing was using investor capital, utilizing that to pay for the rewards of the consumer participation in terms of the application, their participation in taking on different behaviors, different actions within the application. But that's not very sustainable, right? So as your user base grows, investor liquidity starts to run out, we return to a different market, right? It's not very sustainable. So our overarching thesis in terms of bridging out sustainability was looking at the blockchain economy. So looking at sustainable and highly capable rewards and yield capabilities through the crypto markets was a lot more scalable than looking at the fiat worlds. Even in a high interest rate environment we're in now, I look at my traditional banking apps and I don't see any interest coming my way, right? So something is very incrementally broken there. So we really built Klink to basically bridge these worlds together. We appreciate that not everyone is a crypto user. So in the UK, 50% of people under 25, they know or have heard of crypto, but only 7% of people actually hold digital assets. So that's
Only
a stark
7%.
contrast.
Whoa, I thought
7%
it's a lot
people,
more.
yeah, yeah, it's crazy. It's a crazy number. So 50% of people know about it under 25, but
Okay,
only 7% of people participate.
good
So
for us.
yeah, well, our mission at Klink is to make everyone hold some form of digital assets. We don't expect everyone to be a whale, so a person that holds all their money in it or has huge amounts of wealth. But the key, as anyone who is somewhat of a financial literacy, is diversification, holding some form of wealth in different portfolios. You know, obviously taking alternative ways to grow wealth in a segmented manner. So we feel that the participation as crypto grows, it's been hit pretty hurt. It's been hurt pretty badly in the past few weeks from an overall PR perspective. Trust is gone, but we're still very bullish on people taking allocation of it, growing wealth from it. Institutions are now going to incorporate it. We see this.
Yes.
Central banks are incorporating digital currencies. So I feel from the retail market, it's really upon the job of people like ourselves to create these kind of personal finance applications to enable people to hold and grow wealth in digital assets, but do it in a safe, educational manner. So yeah, that's basically the thesis of what we're building at Klink. I'd be very happy to discuss maybe more so on the initial products, but perhaps you have a few
Okay.
questions for me, Omar, based off
Yeah,
that.
yeah, definitely. Definitely. Yeah, that's already, wow. That's already a lot of information. And as well, I think the idea is really good. Now, we are obviously now in a bear market. How do you, I mean, you came up with this in 2022, obviously, when in the beginning of 2022, you said, right?
Yes, correct.
There was still, it was still okay, you know,
It was
everything
starting
was,
to form, I would say, at the beginning of this year. But yeah, we were still certainly at the latter stages of the bull cycle.
yeah, we were still pretty much up. I think it was already on the way down. But anyway, I think it's pretty brave to go in and launch such a product that you're having at the moment in a beer market right now. I mean, it's challenging. Let's say it this way. Even, was there an intention behind? I mean, do you actually choose that time in order to maybe to gather yourself up, to put everything together, and then because the next bull cycle is not too far away? Maybe yes, maybe no, we don't know. But what was the intention behind it? Or is it just, did it got into it? Did you just slide into the down market?
I think if you're moving into being a crypto founder to catch a bull cycle, you're in it for the wrong reasons, right? So I would see that's the truth, right? And a lot of people have been stung in the last year.
Yes.
That's a topic for a different podcast, I would say. I could talk about that all day. But digital assets are the future of money, right?
Yes.
And people don't realize that yet. Institutions realize it now. And ultimately, I and my founder, Philip, are very mission driven for people to start taking some allocation of digital assets, right? So within the application itself, I can jump in, you could see it as a savings product, right? So what we really wanted to do with our first product, and in terms of what we do with all our forthcoming services, we have a pretty strong roadmap of what we want to do, is mirror traditional financial services to create a level of trust and transparency and understanding generally of what this is as an application for more of a wider adoption of users, right? So to the crypto natives, they all know about on-chain technology, non-custodial wallets, XYZ. But for the most part, people are still getting to grips with the technology, right? So probably to to answer your question, it wasn't really encompassing to just do it for the sake of it. We really feel that our business is driven around building in a bear cycle, building off the best practices of these guys that have gone under, which had major red flags that we had seen before they went under, right? So having 10x leverage on your own token for your balance sheet is not a sustainable way to run. And there's multiple malpractices in terms of which they operated. Transparency wasn't there. Proof of reserves, proof of liabilities, that's more on the institutional side of things. But as the retail consumer, education is the key, right? So telling them what, you know, digital assets are, how we actually run the actual platform, how we create interest for the users on behalf of the users, how it's distributed, is something that's imperative importance for us to build trust into the market as the next cycle begins, right? So it's all doom and gloom now. And I would say we're very much in the eye of the storm of this bear market. There's more to come. There's more institutions on the crypto side that are certainly going to go under, right? So we've only seen half the fallout, I would say now. But irregardless, it's a great time for builders. So it's a great time to kind of look what went wrong, look how you can build, create different game mechanics, understand how reward distribution can be allocated, how safety can be ensured across the new wave of crypto users, right? So there'll be a level of education of people. A lot of people have been stung in the last couple of months. I've been partly stung. I'm sure you have as well, right? In terms, even off just the speculation of the cost of crypto, I believe, I saw a crazy fact. I believe 60% of people that bought cryptocurrency in 2021 are now in the red. So there's a lot of people hurting out there, right? But that's not to say that the warrants and the benefits of digital currencies and assets is not still the future of money. So it's, I think, to answer your question, we're very excited. If it's not a good thing that's happening right now, of course it comes with its challenges. But the best businesses in the world outside of crypto, in the Web2 world, the social media platforms of the world, all out of the '08 crisis, right, the recession, there was massive unicorns and great utility businesses brought out of that cycle. So I think it's testaments to businesses now that build off the learnings of the last cycle, will build back better, will have improved services, better transparency, trust, and will be more sustainable for the future, right? On our mission of bringing wider user populations into holding crypto.
Okay. I was hoping kind of for that reply, you know, because most of the institution, they don't really care when or you know, obviously if you're a coin or something, then you kind of want to ride the wave, you know. But if you really know what you're doing, and if you really have a sustainable product in hands, it don't matter when you launch it, you know. It's just
I agree.
Obviously it would help if you have it in the bull cycle, if you have it on top, but you know, it don't really matter, because your product is not for today. It's for today, it's for tomorrow, it's for the next years to come. It will evolve. And I think the concept is pretty good. Just a few questions, or one question what I have as well for this: if you could explain our listeners what will be the difference here if they deposit. Can you first of all, can you deposit into Klink Finance?
Of course. So just like, so basically probably a quick synopsis of the initial product, right?
Okay.
So I hit on the very top of the very start of the podcast. So in its very simplest form, we are a crypto app, a crypto wallet, right?
Okay.
But the biggest difference between us and peers in the market is what we want to bring into our operations, our mechanics of reward distribution, is a mechanism called prize linked savings. So I touched on mirroring traditional financial products, and prior to coming onto this podcast, or prior to the recording, I'd mentioned that we were inspired by a UK, for our initial product, is savings product. An earned product is typically described as, by a lot of crypto platforms, they usually have a fixed term savings product on their solution. So we kick off with this initial. It's that basically we operate like a very much a savings account. You can deposit and withdraw funds at any given point. But the way in which we operate as a business model is that every participant's funds are accrued into one liquidity pool. So we use USDC only. So it's a treasury backed stable coin. All those funds are pooled together, and then the institutional level of interest that's earned on all the funds is then distributed to some users every week, right? So not everybody. So we see ourselves as an alternative savings product. True probability, you would still probably earn a nominal amount of interest, but our prizes range from 1 cent all the way up to 1 million every week. So by having a participation of some savings in our product, you might just become a millionaire every week without having any downside risk, without having any kind of speculation on secondary tokens, right, that are highly volatile. So it's a good first step in. Basically, a stablecoin savings account is the way in which you could describe us. And as I'd mentioned, this is not a revolutionary product. What we do is digitize it. We bring it into the crypto worlds. What we're able to do from the blockchain economy is create high yields or relatively safe and high yields that we can distribute back to users. But this product was created, I'd say in its most form, prize-linked savings is most common through a UK savings scheme called premium prize bonds. So I grew up with this. It's a UK savings scheme. It has over 140 billion in assets under management. I think it was created in 1956 or 59 by the UK government. It has 19 million participants in the UK alone. So it's really well known financial product, and it works in the very same mannerism, right? So basically, funds are pooled together at an institutional level. I'm not completely sure how they would operate as from a bond perspective, but interest is earned from the liquidity, and then that is distributed to some users every week across the user populations, right? So it's tried and proven. We actually came to uncover as well that it's a very common product, not only in the UK, but in the Commonwealth. So in Australia, in Pakistan, India, Canada, all of the most commonly known Commonwealth countries would have actually have some form of government saving scheme that operates in this same mechanism. So what we basically try to do with this initial product is digitize it, allow people to hold USDC, their first step into holding cryptocurrencies, perhaps, right? But as we develop out our product cycle, people will earn interest and yield in stablecoin. What we would start doing then within our product cycle is then mirroring this kind of premium or prize-linked savings scheme into secondary tokens, right? Where we're basically creating community of pooled funds, and the interest from staking, interest and rewards that come from basically yield of these different currencies from proof of stake, etc., is that the rewards across the community pools is then distributed to some users in a gamified manner, right? So how this is safer is if we look to the way in which other businesses work in terms of how they manage at an institutional level, they all got wrapped up in fixed term interest, right? So Terra Luna, if you remember those guys, they were on the DeFi side, 20% benchmark interest, completely unsustainable, goes under, 60 billion is lost. But if we look at the more institutional players like Celsius and BlockFi, right, these crypto platforms that no longer exist, what they got caught in the weeds in the bull cycle, and this maybe mentions a bit about the topic of what we spoke about, and this is, I could speak about this all day, is they were in a consumer acquisition war
as well.
Who can offer the highest interest, right? So I believe in the highest rate, some were offering 12% yield, APY, but on an institutional side, what they were doing is taking uncollateralized loans, taking huge risk in terms of how they were managing liquidity, etc. And once the tide came out, pants down, everyone was in trouble, right? And as well as that, they propped up some bad practices. They had their own token with no utility. They're utilizing their own token on their balance sheet. Just malpractice, right? That ultimately led to their demise. So how does our business operate differently? We earn safe nominal amounts of interest, but the difference is that because the yield is concentrated to some users every week, right, is that you could win huge volumes of money by using this alternative saving scheme. We don't expect to take people's life savings. I say that every person I speak to, but diversifying from a personal finance perspective by holding 10% of your digital assets or 15%, whatever you feel as an allocation, is that instead of earning a nominal amount of fixed interest, the rates are quite low, even in the crypto world at this point, is that you could earn $30 or $50 or $100 on X amount of funds through the year by the incremental amount of interest that you earn on fixed term. But by putting 10 or 15% of that into our application, our platform, you may become a millionaire every week, right? So, and as well as that, there's smaller prizes. So it's not one person's a winner. Our prizes range from 1 cent up to 1 million, and we diversify that at random to the user populations to ensure that there's fair play and a bit of excitement week on week, that people are winning some nominal amounts on their holdings. So
Okay.
I hope that kind of answers your questions and how
Definitely.
how we differentiate as a platform, and where we're kind of going with the secondary sets of our product range.
Definitely. I think it's an interesting. It's kind of the first step into the crypto world. Maybe as well interesting for crypto users which using crypto already and want more stability. Now, normally what crypto users do, yourself, staking. I'm myself staking everything that I got, because it's convenient, and I mean, it's risky, but because you can wake up and pool is gone, or
Depends where you're putting it, Omar, right? So if you go to a yield farm offering 200% APY, right?
Sure,
Surprise,
sure, sure,
surprise,
sure.
they don't
I
last forever,
didn't
those
do that.
pools, right? Yeah,
Yeah, yeah,
yeah.
yeah. We had this in Harmony just recently. That was pretty bad.
Yeah. So again, I get ahead of myself because our first product is of USDC, but our vision of the secondary products as we move into staking with secondary tokens is that we would just use institutional levels of staking nodes. So
Okay.
there's a few players that we would look at, institutional players. They have the node set up. They don't
Anchor.
No, so Block Demon is guys we've spoke with. I probably,
Okay.
there's no agreement set in place, but there's a few, they're the market leader, right? But basically they just act, so in the custody solution, so our funds are held in a platform called Fireblocks. It's basically they're custodial solution. That's where highly secure, multi-layered security infrastructure where we hold the digital assets, right? But basically the integrations in through Fireblocks go to Block Demon is that the liquidity is then just staked for proof of stake on transactions, let's say, right, to the nodes. And that a nominal amount of interest is made in a safe way through their infrastructures, right? So we're insured. That infrastructure is insured as well in the case of breach.
Okay.
But in terms of just YOLOing it into liquidity pools and all that kind of stuff, right? That's not really how an institution should work. And they typically don't either, right? But more on a personal level, right? I would really, to anyone out there listening, if you're looking at a yield pool that's offering anything over 20-30% APY on staking, maybe be thinking twice about putting too much funds in it, right? So, and keep a good eye on it. But there's an institutional level way to make safe forms of staking as well. And again, through our model, through the randomization and distribution and concentration, is that some people win huge amounts. It's a bit of fun, right? And we see ourselves very much as an alternative staking solution as well. But that again is not our first product, but it's somewhere where we're really aiming towards as we develop. Okay. So we've not launched yet. Just for the listeners, we raised our round, as you rightfully said, it was finalized around August. We released it publicly around October. Our team is working very hard to get this first product into market. We should be live in the market around January in a closed beta. Very happy for people to sign up from our website, klinkfinance.com, whereby they're able to participate in that beta engagement, but that we should be releasing fully in the earlier phases of Q1, Q2 of 2023 with the USDC deposit account, and then perhaps in the second half of the year moving into secondary form products, as we've mentioned.
Okay, so seed funds round is done. Now you need to go to action, right?
Yes. So pre-seed is ourselves to get product market fit, to finalize the product, initial teams. There's a lot of licensing, legal, infrastructure, the Fireblocks, all this kind of stuff is upfront fixed costs, right? But we've covered many milestones of that now, right? So now it's really around the product market fit. So we see ourselves serving multiple user demographics, right? So I hit on the first time user of crypto. That's the person who perhaps is engaging in premium bonds under 25, which is a huge amount of people. It could be for the 1/3 of people under 25 in the UK and similarly in Europe, and I'm sure globally, that participate in the lottery at least once a month. So that's an interesting statistics in the personal finance scape, that people are taking on these loss-making activities. That's a user demographic that we're really trying to engage with, discuss, and understand what our product would mean to them.
Interesting.
To eliminate the downside risk for them in engaging in a poor habit week or month on month. But then, of course, as we've mentioned more on a conversation of people who are more crypto native, is, you know, seeing ourselves as an alternative savings solutions in a bear market that can yield alternative reward to users in a more safe mannerism, right? So there's core demographics there. There's room for everyone on the platform, but it's for us to refine that now over this next 3 to 6 month landscape as we start engaging users. So we have 10,000 signups. They come from here, there, and everywhere.
Okay.
Wow. So we're looking forward to kind of, so we're getting good feedback initially, but everything now is a qualitative as much as quantitative to understand, you know, what they feel this product could be moving forward to help us shape that narrative and that structure of engineering that we will build in the secondary products as we spoke about today.
So Chris, these are really some good information, and I have a few more questions, or I need to think about our users, or about our about listeners.
Mm-hmm.
If they have lost us at this point already, then we make it very simple. What would be the difference between a Coinbase account and the product that you're offering?
Sure. Well, Coinbase is quite advanced in its product offering, right? But as I've mentioned, you know, a lot of businesses, a lot of platforms, the ones that are still alive after this last few months, right, is on these platforms. Usually, they let you hold your digital assets, your Bitcoin, your stable coin, ETH, you name it, right? And they can offer you nominal amounts of interest, so 3-4% in terms of putting them into either stake pools or perhaps putting into some form of lending service of theirs, right? So the big difference for our initial product is price-linked savings product is that instead of offering a nominal fixed interest that's going up and down all the time, so 2-3% APY, is that what we do is we participate in rewarding users for holding funds in the form of weekly prizes. So how does that work? Basically, we run a no-loss sweepstakes for this initial product, right? So basically, for every $25 held in USDC on our platform, you're actually given a ticket with 7 numbers, like typically a lottery, a no-loss lottery, basically, is how the mechanics of this game works. And what we do is we release a number per day on our platform. The more numbers you will match on the week is the more how much you'll earn in interest. So what's the trade-off in that, as opposed to a fixed term interest account, is you will still win prizes, most probably in terms of the probability metrics we put on our platform. So you win 1 cent for matching one number on one ticket, which you can have multiple tickets, right? But if you match all numbers going up in terms of sequencing, you win $1 million, right? So there's no loss. Rewards are randomized across our user populations, but there's a complete upside in terms of using our price-linked savings service as opposed to offering 2 or 3% APY in the existence of funds. So there's no downside, but the upside is incrementally larger than utilizing funds in a Coinbase account or a fixed term savings account in the traditional market. So as I've mentioned to Omar, we see ourselves as an alternative savings platform, no life savings to be put into one platform ever. That's just general money advice, right? Yes. Diversification is key, but we feel there's very much a space for us in the market where you can put an alternative amount of savings in our platform and have an ability to have a complete upside, a life-changing amount of money come your way every week.
Very good. I think, wow, that's great. It's a great product. It's something I would test, you know, and see.
We're very happy to have you on the beta list, Omar. Very happy to add you in.
Would be great to see what it gives, because obviously I'm very into the crypto space myself, and I like to see the evolution, what is gonna, because we're just in the beginning of this. It's literally a baby, you know, or even less. It's not even really born, you know. We're looking at the crypto world like the internet back in 1995, 96, something like that. That's why we have so many crashes as well, because nothing is really regulated. It's like a node which is not yet
Yeah,
coded correctly. I mean, obviously the programs are coded correctly, but I mean, like, the infrastructure and everything is not yet up to date.
yeah.
So in the
It's
next
a weird one as well, right? So like, retail goes in the bear cycle, and the media, I would say generally the
goes as
global
well.
media is not a fan of crypto in the first place, right? They're very quick to present the losses but not the wins that people have had in cycles, right? But I attended Token 2049 in Singapore around September time, and it's a community of builders, right? So every single, I was overwhelmed by the amount of projects, the optimizations of such as ourselves, optimizing traditional type solutions and bringing them into Web3, making better platforms, better products. So we're only scratched the surface, right? But I also do believe that the mishaps that have happened in the last few months is going to really push regulators. So we've watched this. I've watched this for years, right? So prior to this business model, I've been in the venture space in Berlin. I'd always been validating in spaces of crypto services as well, right? So regulation was always on the forefront. But ultimately, what has happened now with FTX, a number of other players going under now, is the next cycle of builders will also have to adhere to global regulations, right? So I just hope that the regulators are fair. From what I hear in terms of feedback of the decision makers, they do understand the underlying benefits of blockchain, right? So we will see the more sophistication of the markets come through in different products and services that are regulated, and ultimately will really challenge the traditional markets in this next cycle. So there's a lot to be excited about.
Oh, definitely, because we, like I said, we're only the beginning, and it's
Yeah.
a huge world out here. So, and what I personally want to see as well, what I'm always emphasizing as well when I talk with developers in the crypto world or metaverse or anything of that kind, is the connection between e-commerce or agency models, what we do right now, connection with the metaverse or with crypto, with digital assets in general, because we are completely already, I would even say, kind of decentralized. I mean, the only thing what we still use is some form of banking. We already on other products. So I think, like, our company, it's already 70% decentralized. So if we
Really?
can get this if we can get this last 30%, and these last 30% is to fully go into an alternative payment method, which is cryptocurrency.
Yeah.
If
Well, you
this
see,
happens, yeah,
yeah, again, like the institutions, so Stripe now have their eyes on and off ramps, so they're integrating services for USDC payment. I do believe
wow,
a couple of months ago, basically in the creator economy, is that they created easy plugins that people would be able to receive their invoices or their payments in USDC, so on-chain currency. And to my understanding, they've just simply released payment integrations, right, as well. So I'm uncertain if they plug into e-commerce platforms, but make no mistake, they're on their way, right?
that would
I
be
even see a
amazing.
future of Klarna, right, where basically there can be after payments. Everything will be done through on-chain currency. So the real question then is what happens in terms of the ownership of these monies, right? So this on-chain tokenized pegged value to a dollar or a euro or a pound, right? So we see decentralized money such as Terra Luna, algorithmic stable coins are still to be proven, right? But there's a very much a thesis in the crypto native markets that they can work with better sophistication in terms of the way in which they're operated. But we also see centralized, privatized stable coins such as Circle, USDC. But also there's a real question of where the future of money goes from
Yes.
basically a central bank perspective. So CBDC, central bank digital currencies, are all being processed now, right? So there's thesis being made in-house. I believe India has rolled out digital currencies. The Federal Reserve, the ECB, Bank of England are all looking at these CBDCs and the
Yes, because
implications that they can have. So
they don't want to miss out.
exactly, right. They'll say different. The media will say different, right? But
Exactly.
ultimately, what's going on in the background with institutions is there's no question that the on-chain technology will be the future, right? So even if you look at settlement, right? So if you look at the Web2 world in terms of how things work and the Web3 world, say, for instance, you're an institution that wants to purchase Nestle on the Swiss stock market, right? you would have to go from dollars, transfer it over to out of an ACH account into an IBAN account, most probably have a bank set up in Europe. You would then have to switch it into the Swiss franc. You would then have to purchase the stock, right? So every single piece along the way here is that the institutions, the archaic nature of banking systems is everybody's getting a cut, right? And what a lot of these institutions are very afraid of is that if you use on-chain currency, right? So whatever stable coin it is, so say USDC, is that transfer between both institutions is instantaneous. It costs next to nothing. There can be absolutely no doubt of the ownership, the remittance, the ledger capabilities of where the money had come from, who owns it, where it was prior, right? In terms of auditing, AML, KYC, on a business perspective as well. So it's revolutionary technology, but the question is, I would see on the next side of this next cycle is the wars of stable coins, right? And there will be winners, yes, but make sure to know that the institutions definitely have their name in the hat, right? And it's forthcoming. So I don't know so much in terms of the payment scape of e-commerce, right? Specifically, I had seen that Stripe was enabling USDC payments to freelancers, sole traders, etc., in terms of easy payment gateways. But I would envision a future at the checkout across e-commerce. It will be true direct payment of on-chain.
That would be the best.
Yeah, it will come.
Because if you look at Stripe, we're gonna pay to them a huge amount of
course, they take the cut.
Of percentage in order to process this transaction. So my thought of this is because for example, our agency, we are international. Okay, we receive payments in all kind of currencies. We pay out to our employees in all kind of currencies. So we are using now a mix of we don't even use traditional banking anymore. We use only payment providers. So we are really already, that's why I'm saying we're already 70% out of there. So if we can get this last step, and completely go into cryptocurrency and work through exchanges and through wallets, that would ease our pain a lot. Because as you know, if you mix up payment providers with banking, with traditional banking and everything, you still pay $30 per transaction sometimes, because of the exchange rate, because of this, and it's so useless because it frustrates me, because I don't even want to look at the end of the year of what we have paid in fees. It would, I think it would create another business,
My friends who work in e-commerce, right, I used to look at their numbers and I was shocked by how much the payment guys get, right? It's ridiculous. So they create the infrastructure. So maybe a topic of this, and perhaps just as we wrap up, is that, there's always a joke around, you see the memes on Twitter, is like someone loses their crypto, right? And it's like, where's the customer service? So where's the bridge in that, right? So I believe, I'm crypto native, right? I believe in decentralization. But again, on our product, getting users used to holding digital assets, right, on a safe platform that's vetted, that's insured, that has best practices where we're licensed, right, is, I think if we talk about the payments landscape, right, yes, of course, you could simply wrap a QR code into your payment terminal, right, and set up kind of some API that confirms the transaction to people. But I also feel that the future of these payments will have to be through some form of an institutional, whether it be private or governmental, right, is that there has to be some remittance, that there's an ownership if there's a miscommunication, if there's an error, if there's refunds. So unfortunately, I don't believe the fees should be the way they are in this Web2 world. And a lot of that plays into the archaic nature of the banking systems, right? And as they go through they could go through 5 or 7 different banks. That case study that I kind of mentioned to you there, right? Yes. Where someone's just trying to buy something on a separate exchange. But the real tell will be the rates must go down amongst these institutions because they don't have these overheads anymore. Even in terms of Visa and debit cards, right? A lot of it goes in terms of like Visa themselves take a good margin out of so if you're like a point of sale system, so like if you're at a coffee shop and you touch like a third party payment gateway, let's say, right, a lot of their charges come from just paying Visa, right? So those charges could go down incrementally. But what I would like to see out of the next marketscape, and as this more develops, is if it does come from a API integration of on-chain currencies and transactions, I do believe that there has to be a person in there that says, hey, I sent something wrongly, there's a refund, there's an admin and support, but who will dictate those rates, right? So how can they run as a margin business, make their profitability when their bottom line becomes a lot larger because they don't have these consistent touch points of payments through third-party processors? So
yeah, it's true.
that,
There still
that
is.
will be the debate, I feel, in all of that, right? But make no mistake, the big institutions are already on it, right? So it will happen sooner than later.
Sure. So yeah, then let's wrap this up with one question, and then as well we need to know where anybody can contact you who has ever questions. Give us some kind of message to the world about crypto, about your financial product in general. What is your message to the users nowadays?
Sure. I would say in a very fragmented and hurt market, do not give up on digital currencies. And in terms of Klink, we're building something special, something alternative, and it might just be the best place you've ever put your money, right? So we are very excited to have people join us. We're in an early phase of our business, so pre-launch. We're in a sign-up phase. We have a reward incentive of offering people free tickets onto the platform if they sign up early doors. So you can check us out on klinkfinance.com. Sign up through our beta. Our Discord channel is also live. All our information is through our website. We'd be very, very excited to speak to people early doors. If there's anyone at an institutional level or anyone who's out of curiosity, I understand that your podcast gets a lot of different kinds of listeners. I'm always available on LinkedIn to discuss what we're building at Klink. If anyone has anything to discuss or has any points of topic that they would like to recommend to us, we're always open ears to adopt our product from people with good knowledge in the industry. So I would also love to come on the podcast again, perhaps in a few months' time, once we're live. I'd be having a lot of statistics of how we've performed in our first few months.
That would be great as well. You know, it's always good to follow up on something that you create right now and to see how it's actually will roll out in the future. So yeah, thank you for your time today, Chris. Thanks for this valuable information. And I wish you much luck with your product. And as the bear market goes back into the bull market, I'm sure we will hear a lot more again from crypto, and I'm sure as well from Klink Finance.